Hey traders, it's Friday, OPEX day, May 16th, 2025. I just want to go over a couple things that we're talking in the Discord. Nothing's changed from yesterday. And I want to remind you on ES. I'm going to go to ES after this. So we're going to talk about the volume and we're going to talk about implied volatility. Some of us have had our options crushed because volatility really dropped. And I'm going to show you an indicator that will allow you to check that out, kind of give you a gauge of when you should be playing naked options as opposed to spreads and such. And so we changed to our in-out spread strategy when we were in these higher volatilities, and I'll go over that. So we're doing this intraday about 1:15 p.m. Eastern Standard Time. If you want to get these videos intraday, consider helping out the channel with a 99-cent a month subscription. It just helps us keep this channel going and doing videos every single day to give you a little bit of extra knowledge or visibility if you're already a knowledgeable trader on something that you may have missed. And again, yesterday's video, you can check that out if you want to see the full analysis. None of the indicators changed. The D mark is on its 5th, so it's nothing to see here that will change anything. Don't want to waste your time. So let's jump into it. We have SPY. Can't do this on SPX because there's no volume. So we have SPY here. Let's open up the chart. We're just drifting up. We're having a very light volume day. We're at 35 million contracts. I know the day's not over, so not the lightest day, but we're just, at any point this market could reverse. Clearly we're getting pinned, and I don't mean that, Qs are sideways, but we're just floating. When the week started, we had our gap up, we got to our gamma levels, and which is also a good resistance level here. And we're just going to be pinned here for the rest of the week. I can't imagine dropping here. But one thing that was mentioned was that the most bearish day, individual day each month, is the Monday after OPEX. So keep that in mind. And we're looking at volume here. Volume's light. And you can also gauge, you can pull up your study on the platform that you use. This is Thinkorswim, and you can use the volume average. Pull that up. You can click here, look under volume. And then you see it there. You can double click and it goes over and you can apply. Okay, so this is your volume average right here. It's set on 50-day moving average. So you can see it oscillates through. And then when you get to, you can see how far underneath the average. Now the average is elevated right now because of the extreme volatility that came into the lows. It's not unusual. You'll see high volume when you get into lows. If we would have looked at this at the time, we would have saw that there's some capitulation volume involved here. And now we're back to normal and even lower. We're extremely low. We're at the 35 mark here. Now, there has been in the past in the 20s as well. So again, not the lightest ever. That's 27 million right there. But you can see a lot of times it comes right before a reversal. So keep that in mind. And here's our money flow index, which is like the RSI with volume in it. We're still not over to this overbought territory. So how do we interpret this? So this could be a situation where maybe we get a dip, maybe similar to this, where we didn't quite get a overbought situation, and you had a little bit of dip in the money flow. Okay, a little consolidation there. And then you kept going higher. And that was your setup at that time, where you got that correction here. And then we actually had positive divergence and kept, every situation's different. But if you look at this situation here, overbought, not overbought yet, had a little consolidation, then got to the setup, and then you had a consolidation. And so, how do we interpret this? Does it even get overbought in this move? Maybe not. Maybe not if it's a bear market situation. Okay. So let's keep an eye on this. There's no setup. I can't trade off of this alone. Okay. But we do have the Bollinger Band set up and all those others that we looked in the analysis. So, but I love this money flow index for looking at that. Now, if you're a little bit more of an options geek, you can look into some of the below the options chain here. You could check out the sizzle index. You can check out some of these statistics here. And what we're looking at is the one that I want to look at specifically is the stock sizzle. So the last 5 days, how are we compared to that? And one, if you're at a 1, that would be at on average, and we're below average. So we're about half in volume for stocks, for buying the stock. Okay, I know there's options being bought out there. There's actually 2 times the amount plus some of the amount of calls, and overall the sizzle. So people are buying options at this point in the last 5 days, and today a little bit more. They're getting exuberant, volumes low. It's still considered bullish flow. So until changed otherwise, then we're looking for a reversal here soon, but it has not happened. And so the put to call ratio, that's almost even here. So nothing to see quite there yet. Now we were looking at, and you can look, there's all sorts of information on here. You can even go into detail on the calls, and are they being bid up more than the ask price? This is about even. So I'm not going to say that it's way off. It's not extreme at this point. But there's implied volatility and such, and we'll get to that. The implied volatility is at 17 right now. The high, 52-week high was it's point, but it's a percentage. It was almost 50%, and the low is 11%. Okay, so we can look at that separately. If we go to the studies, we can take off these other ones to clear up our board. And you can check out the implied volatility. I know some of this gets a little bit boring for some people, but if you really want to see what's underneath the hood for markets, this is what's happening. All right. So this is our implied volatility. This is directly related to options. And when you have such a high spike in volatility, you want to catch, for example, this is exactly why I want to catch turns. All right, when you catch turns in the market, however you do it, in out spreads, or give yourself some time, you catch these turns and you have the volatility, implied volatility is really low. Then you get these spikes in there. Maybe not this kind of spike here that's out of the ordinary, but with implied volatility rising, your options premiums rise as well. So that's why puts often when they begin to go into the money, you can buy them out of the money, and they quickly gain premium, and they can triple, quadruple really, really quick, which is quite the opposite of calls. So after at this point, in this volatility spike, now options are really expensive. So if you're not already in, well, first of all, this can be a contrarian situation where you don't want to be in anyway. But if you're continuing to buy options, they're going to be extremely expensive. So this is the point where you want to either start selling options up higher, or you want to get into spreads, which would be a much more conservative situation. So after the spike here, if you would have gotten to, for example, some call spreads, it would have saved you, the agony of your options premium going down. Even though you're in the right direction, you may not have made potentially as much money for the risk that you take. Okay. So in this type of situation where volatility is falling, you either want to be a seller, or you want to be selling options, or you want to be into some spreads. For example, we started these in-out spreads, which we are 100% on right now for these trades. We added on another one onto MJ. So if you want to see that, consider becoming a $4.99 individual analysis member on YouTube. It's a really great deal. And so what we're doing with each trade that we post in the Discord, which the Discord comes with any with the 99 cent or $4.99, doesn't matter. So you get in the Discord, you see these trade alerts. Well, as of today, I'm going to do a video on the setup and show you exactly why I chose to pick those trades, so we can also learn to see if those trades are wrong, what had happened. Okay, we want to learn and we want to make money together. So join me in that Discord and consider becoming that $4.99 member as well. And you'll see why we chose MJ. We're going to be buying MJ hand over fist every time our options go. We're going to keep buying MJ. MJ is in my IRA. It's in, we have call spreads. We have in-out spreads. We have naked calls. Okay, all of the above. And so I went through that today with that setup. All right, so I hope this helps. The implied volatility, you can check it out here. There's also other places you can look at it. If you're on Thinkorswim, the implied volatility is also in the monthly. Here you go. The monthly chain, options chain. And so you can see that it does change, but right here on the end of the week, it's 23%. But you see next week, it's down to 10% or so. You can see the averages, and it's very typical to go out to later dates. That's why some people sell options at really later date and then buy certain options against them. I'm not going to go into those strategies, but so you can look at that. And then there's your average implied volatility right there. And you can see where the high was. Again, that's in point. That's your percent though. It'd be 49% and 11% there. So a lot of information that the charts give you, and you can see where that implied volatility is at the time. And you know that it's higher today. And so it's actually sort of inverse here, where I believe this is a situation. Implied volatility is so low that you don't have to go into spreads, but you can start buying naked calls and puts. In my case, yesterday we talked about the puts. I didn't go into detail. I might do that in a separate video, but we're into another core position for puts, and I think that's going to come into effect tomorrow, right? Monday's trading, and we should see those start to come into fruition. Now, is this move to the upside done? We don't know that. There's situations where I've seen the last part of the move come down. We have some protection for for bulls here with this big gap. I do believe we close that gap, but do we actually go to a new high? All right, I'm blabbering on. I want to go to ES. Okay. And the one thing I want to show here, again, is our levels. We have the 78.6% that we retrace to. There's still a possibility that there's a wave 4 in here. If this is a bull situation, you have a 1-2, then the wave 3 should be done into today. And we're looking for Monday to pull back. Now, the big deal is this a wave 4? If we go underneath a certain level, I'll share that in the Discord. You can see it here, but if we go into that, then wave 4 is going to be invalidated. And we know that we're in a bear situation. Other than that, you can get one more pullback and one more high is available to happen. We know that, but if this bear scenario is correct and we're just in a bear market, rip your face off rally, then we shouldn't get that new high coming up here, okay? So after this, we're still going to get those bounces, but we should get lower highs at that point. And for the larger scheme of things, we're looking for a 5-wave move, not a 3-wave. So we're going to have to keep our eye out. It could be a 5, 3.5. So if that's the case, then we're setting up really for a bullish situation where we're going to get new all-time highs. And we're just going to have to pay attention closely to see how that develops and what it looks like, because the market never makes it easy. Most people think this is an ABC. I actually don't. I believe this is an expanding leading diagonal. And I think we had our 1, 2 here. Our 3 was longer than the 1, and our 5 was longer than the 3. This happens in commodities all the time, but this situation is very rare. And so it was difficult to find out what happened until hindsight afterwards. If we would have caught it early, you know, what if, you know, if coulda, shoulda kind of thing. So that's what I want to show you. This wave count looks to be complete. Now, all this gibberish that's happening here, you can go down to your 15-minute or 5-minute and start, you know, figuring out your wave count way inside of there. But that's not how I play. We're looking at indicators. We have negative divergence on everything except for that money, right? Money flow index. And then we're looking for a reversal coming here soon. The top is in. All right. Have a wonderful day. Don't forget to like and subscribe. Thanks, you guys, for all the support, and we'll talk to you in the next video. We'll do a weekend update tomorrow.